Right. So let's now consider the format of manufacturing, of a manufacturing account. I'll give you the format of the manufacturing company, the manufacturing account, of course, manufacturing account. So what is happening is that there are most of the common ordinary companies and some sole traders that are always involved in the buying and the selling. They have purchases and then they sell. They're just there purchasing and selling. Those are ordinary businesses. But we also have got, in reality, or in the real life, the companies that produce, that manufacture, okay, they are able to manufacture the goods. And as they manufacture the goods, so you would find that they don't involve themselves in purchasing or what, they just manufacture and selling, right? So the whole idea behind the manufacturing account, it is to assess the cost of production, right? Since the company is involved in doing what? The company is involved in production. So what is happening is that this same company that is involved in production, it incurs costs as it is, producing. So the idea behind manufacturing account is just to assess the cost of production. And it is that cost of production that you're going to take to the statement of the finished goods, right? There is the statement of finished goods in the profit and loss account of the finished goods for a manufacturing company. So there is that part where you need to put the cost of production. So this cost of production that we are coming up right now with is the one that we'll use to the income statement or to the profit and loss account of the finished goods. So it is very important that we learn how to assess the cost of production. That's the whole idea behind the manufacturing account, to assess the cost of production. And so let me start with the format as well. Let me give you this one, 3 columns. I've left the formats in US dollars. Let's put these are dollars. Let them be in dollars. I've just decided to put them in dollars. It doesn't really mean that they'll have to be in dollars. They just have to be in dollars. You can put them even in quarters. Right. So with the cost of production, to start with, you have got the direct costs. What you call the direct costs, they are the ones that form the prime cost. And with the prime costs, we're talking about the costs such as the direct material costs, right? Direct material costs, plus what? Plus the direct labor, plus the direct expenses, the direct expenses. When you add these 3, you form what is known as the prime the prime costs, which is just the cost of all the direct costs. And once you have the prime costs, what will happen is that now to this prime cost, you will add the indirect what? The indirect expenses. The indirect costs, or which we usually call them the factory overheads, the overheads, right? So you are going to add the factory overheads to this. Add the factory overheads. Once you add the factory overheads, which are the indirect costs now. So this one, the prime cost is about the direct one, then the overheads is about the indirect one. Add all the costs. So when you add everything, you're going to have the cost of production. Now, it is interesting to learn that in the trial balance or in the information that you'll be given, most of the times you will not have the value of the direct materials as direct materials. Right. You will not have the direct materials like labeled, oh, direct material is 5 kwacha, is how much, whatever it is. No. Instead, the value of direct materials shall be broken down. Okay. You will have the components of the direct materials. And so the components of the direct materials are the ones that you are going to use to come up with the direct material costs. Is that clear? So these costs, they can be given in a component. They can just give you key components of these costs. So you should know actually what forms these costs, so that when you are given these costs, these components, you can just combine the costs, the components, and come up with these particular costs. Is that clear now?
Yes, sir.
Right. So since that is clear now, we can start with the direct material cost. And with the direct material cost, as I said you will not have the direct material cost as it is. Instead, you'll be given the components. And so let's start with the components, the direct material. Number one, it starts with the, okay, let me write direct material costs. Material costs. Under the direct, let me just write direct materials. Under the direct materials, you start with the number one, the opening stock, or the opening stock, right? The opening stock of what? Okay, let me start from here so to get it. The opening stock of raw materials. Opening stock of what? Of raw materials, RM raw materials. You write here, okay? Why are you writing the opening stock of raw materials? Because in the information, most of the times that you'll be given, the opening stocks, you have 3 opening stocks usually. You have a lot of stocks. You can have the opening stock of raw materials. You can have the opening stock of the work in progress. You can also have the opening stock of the finished goods, right? So we need the opening stock of the raw materials. That's the opening stock that you need to put here. Is that clear?
Yes, sir.
And so to this, to the opening stock, you'll add purchases if you have any purchases. The purchases of what? Of raw materials. So you add what? You add the purchases of raw materials. So if you purchase any raw materials, you can just add them. Let me put them in this first column here. The raw materials. Then to these raw materials, you can even add the carriage inward. You can add the carriage inward. These are direct costs. Carriage inward of what? Of raw materials, okay? Carriage inward of raw materials. Then when you have the purchases and the direct costs, then you can less the returns outward so that you can get the net purchases. You can get the returns outward, or the purchases returns of what? Of raw materials. Since you are subtracting, we'll put this in brackets like that. Is that clear? And so once you do that subtraction, the figure that we'll find, we'll write it here, okay? Yeah, we'll write it here. This is the value of the net purchases, okay? Then in this figure that we have found here, it should actually add, these two have to add here, right? It should add with the opening stock of of raw materials. So once you do your addition, everything, when you add when you do your additions, you're going to have the value here, right? And this figure that you have, you're going to name it the cost of, it will be the cost of raw materials available for use. Cost of raw, let me just write RM, but you should be writing it in full. Raw materials available for what? For use. That is the figure. Is that clear? It's found by adding the net purchases to the opening stock. Okay, are we together so far?
Yes, sir.
Okay, so from here you can even less, you have to less the closing stock. Closing stock of what? Of raw materials, okay? Less the closing stock of raw materials, like that. Once you less the closing stock of raw materials, you have one figure, right? Let's see, let's write it somewhere here down. This figure is what you're going to call the value of what? The direct materials. This one. This one will be your value of direct materials. Is that clear?
Yes, sir.
So now, let me erase because of the board, the space that I have. So now we have the value of what? Direct material costs. And you have known how to come up with it. So let me just erase. And as I erase, may write it here. It is here, right? This is where it was. The value of the direct material costs down. So to that figure now, it just has to be continued the way where we have ended. You have to add what? Direct labor costs. So we can add direct labor costs. Most of the times under direct labor, you have direct wages or direct salaries. Direct wages, that's direct labor, okay? You add here. Then from there, you can add the direct expenses if you have any direct expenses. So add the direct expenses. Once you add the direct expenses, what are you going to have? You will have what is called the prime what? The prime cost. Let me write it in a different, using a different marker so you get it. The prime what? The prime costs. It will be here. Is that clear?
Yes, sir.
Yes. So now you have the prime cost. So to the prime cost, you have to add the overheads, the factory overheads, not the non-factory overheads, but the factory overheads. So you get to add the factory overheads. So this is just a format. Add the factory overheads. Now the factory overheads are also called the production overheads. Okay, these are the indirect costs that are incurred during the production process, the factory overheads. Yeah, so you have to add them as well, right? Just have to add them. They should be added. So under the factory overheads, what we have to add, there are many factory overheads that we have actually. So you can just list down as many as you have been provided with, okay? Some of them that I can just include would be depreciation of machinery or in the factory, depreciation of machinery, Right. Just write that in the second column. Depreciation of machinery, you write. Then you can also write lighting and heating, right? Lighting and heating. You write like that. Power, canteen services. There are many factory overheads. Yeah, not canteen services, sorry. Power, the electricity that is incurred. All those services, all those factory overheads, in short, to be added here, all of them. I've just added two. So, but there are many. You add all of them, as many as you have been given in the information. So now, when you get these factory overheads, you can consolidate them here, add them, and then their sum shall be written down here. Is that clear?
Yes, sir.
When you write like that, then you have to add here. You have to add these two. When you add these two, check. These two add now. The prime cost will add with the total factory overheads, so that you can have the cost of what? Let me write in a different mark. The cost of what? Of production. Is that clear? The cost of production will be here. That is the cost of production, which you are going to transfer to the what? To the profit and loss account in them of the manufacture of the finished goods. Now, if you don't have work in progress, right? You don't have work in progress, and you also do not have to add the manufacturing profit. You can end there and take this this cost of production to the, what is that? To the profit and loss of the finished goods. Now, most of the times, again, in a serious accounting, you find that you have got what? The work in progress. So this same figure, again, you will not end here. If you have the work in what? In progress, the opening work in progress and the closing work in progress, you have to adjust this cost of production, adjust it for the opening and the closing work in progress. And how do you do the adjustments? Let me erase on top here and take these details right on top. So I'm sure that you're just writing down straight, because you should just be writing down. It's a connected format. It's the same statement, right? So let me just write cost of production. I'm doing this because of the board. Cost of production. So you, when you're writing, you should just continue writing down in the same format. Cost of production, here, write it here. Now, the point I was driving at is that if you are given work in progress, you will not just end here. Instead, you have to adjust for work in progress. Then this one, this cost of production that you have, stops being just the cost of production. It becomes the gross cost of what? Production. Is that clear? It becomes the gross cost of production. And once it becomes the gross cost of production, you will add what? You will add the opening work in progress to the same figure. Add the opening work in progress. WIP is work in progress. You can write it in full if you have enough space. Then once you do that, you will less what? You less the closing work in progress, like that. Have you seen that? So you add opening work in progress to the cost of production, Then you less, from that you can also less, you less the closing work in progress. What you are going to have is what is known as now the net cost of production. Is that clear? You have the net cost of what? Production. It will be here. So you have the gross profit, gross cost of production. Let's call it the gross cost of production and the net cost of production. So now, if you just have the opening work in progress and closing work in progress, this is where you end. So this net cost of production is the one that you are going to do what? To send to the manufacturing, to the profit and loss statement, right? To the profit and loss statement of the finished goods. Yeah, of the finished goods. That is if this is the amount of the information that you have just been given. Is there any question?
No, sir.
There is no question, right? Now, again, sometimes it is very interesting to learn that you may have some further information that the company or the factory is planning to transfer, okay? Is planning to transfer that to the finished goods with the profit, the manufacturing profit. If you're given the information that they will have to add some manufacturing profit, like this cost will be transferred, okay? They will transfer that with the profit, like they will add some profit margin. Then you have to add the profit here. You add the production profit, the manufacturing profit, the information will be given. You add the manufacturing profit. Manufacturing profit. If you have the manufacturing profit, you're going to add it here, right? Once you add the manufacturing profit to this figure, to the net cost of production, what you are going to have is what is known as what? Is what is known as the market value, right? You will have now the market value. This is when the company, the factory has decided to make a transfer on a profit, like on a manufacturing profit. We'll have a question about market value. So it is this market value that you're going to do what? To transfer to the PL account of the finished goods. It is the market value, okay? So just a quick one, we said that you can transfer the cost of production, and you will not call it the gross cost of production when you don't have the opening work in progress and closing work in progress. You just call it the cost of production. But if you have the opening work in progress and closing work in progress, you call it the gross cost of production. Once you adjust the cost of production, okay, for this, then you have the net cost of production. From the net cost of production, if you don't have the information that there was a transfer, okay, on a manufacturing profit, then you have to end here and get the net cost of production, post it there under the cost of production in the, what's that? In the statement of the finished goods, like the income statement of the finished goods. That's where you end if you don't have the profit. But if you're told you added profit, there is need for the profit, then you will add that same profit, and then you have the market value. You will not call it the cost of production, no, you call it the market value, and it is the market value that you're going to transfer to the profit and loss statement of the finished goods. Is that clear?
Yes, sir.
Right.